All right, what's going on, guys? Currently in a model number 3 long. It performed. It's like really, really fast. One of those ones that it's really easy to miss, but obviously you can see I got on board here. This right here is the lowest hanging fruit model 3 target here, the relative highs inside of the range. And then all I'm doing is holding a runner up to the external range liquidity. So always paying yourself without requiring the full high to be ran is a very, very good principle to live by as a trader. So just kind of calmly, patiently watching this thing, letting it pan out. The edge presenting itself. You take the trade with confidence. Everything else in between is noise. All right, so partial incoming, right? Obviously, like I said, everything else in between is noise. You're letting the trade pan out. This is my edge in the market. If I'm not executing an edge, I'm not executing something that repeats over and over and over again. What do we call that? It's gambling. You're either gambling or you're executing on something that repeats and truly gives you a winning edge inside of this market. All right, there's the partial. We're holding the runner then. Like I said, I'm gonna reduce stop loss stuff. I'm not phased or I'm not feeling any type of way about this trade, even if it was a loser. It's the same thing that I execute every single week, every single day. I literally executed it in the London session today, and it just repeats once again. All right, so all internal range buy side has been swept from the market, and now we're just gonna wait on the external. Now, what did I tell you guys earlier in this video? I never require the full tick of the high to be ran. That's why I take partials at internal range buy side, and I'll hold runners to the highs, right? As a matter of fact, I'll even go farther on this and literally just close out right here at $500 extra, just to show you guys it doesn't matter. You guys got to stop worrying about, a difference of like 2 to 5 handles, right? So by me securing my profits right there, that's it. You don't need the full target to be hit that you're looking for to make money. Take your profits when they're on the table. All right. So I hope you guys found this execution management useful and insightful. I'll see you guys in the next one. Be safe. Take care. All right. So I'll walk you guys through the trade. It's only right that I actually break it down here. So if you actually go back earlier in the day, you're going to see that I took two of the same exact trades, maybe not identical, but we have one here in the London session, kill zone, and then we had the same exact model right here in the Asia session. I long it, I'm convicted, I'm confident, same exact thing, same mechanics, and I'm going to break it down in the trade that I just took right now. What we are looking at here is a very tough to get a part of model number 3. All right, and why I say that is because it had little to no retrace, okay, and just blast it off to the highs. So let's back up for a second and break down what actually made this trade here so effective. Okay, we see the original move at 9:30 right here to the upside. Assertive move to the upside. That is step number 1 of what I'm looking for when I'm trading these continuations. A trending market. Not to mention, we're in a bullish buy program. Nothing is bearish. Nothing. Okay, I'm not trying to be the guy that's egotistical and picks the top. I'd rather stay in tune with the order flow. Okay, scaling to the 15-minute chart. This is where mistakes are made in the market. This is where traders FOMO in. Instead of waiting for what I just showed you guys right there, what they'll do is they'll see the original move earlier in the day and try to FOMO in, get stopped out, right? And that just spirals them into the loser cycle, trader's graveyard. So let's break it down. Step number 1 was this assertive move to the upside in a bullish market. Step 2, I'm watching a 15-minute or hourly Fair gap. So as for the tap into the higher time frame gap, I'm either using the 15 or hourly chart. Okay, in this case here, you could have used either one. Here's the hourly gap. You can see we manipulated down into that. And the same thing happened on the 15-minute chart. We dropped down, tap into the 15-minute Fair gap. But what's so key about this is the fact that we're coming down and sweeping the sell stops of those who are chasing the move to the upside. All right, so let's dive deeper into the lower time frames and show what really made this so effective. All right, onto the 1-minute chart. It's very simple. It's crazy simple. Probably going to sound way too simple to be true, but the only thing that powers this type of stuff, okay, it's the patience to wait for the model to perform. If you don't have that, you're never going to make money consistently. You have to wait for the edge and ignore everything else. Okay, we have that sell side tap inside of the gap. We have a light bulb. What the hell is a light bulb displacement? You don't have to ask that question. You're going to know it. It's this type of stuff right here, creating multiple fair value gaps, shifting above down candles, right? It's just obvious, and it's blasting through opposing arrays, such as this fair value gap here, this up candle. What sweetens this up and ties this all up in a neat bow is the generated highs that we have above. All right. Way too smooth of a top, very obvious, right? It's a trend line forming. We have relative equal highs here, relative equal highs here. Very obvious fake top in the market, and I look to prey upon that when certain environments such as this performs. As for my entry, I had the intent of entering on this down candle here. I deem this as my Model 2 entry point. Okay, I'm not going to dive too deep into it here on the YouTube, but just know that it's my Model 2 entry. It's time-based move. All right, and you can see here we wick down, but I'm actively identifying just how quick this market is. I'm knowing I'm probably going to miss the move if I wait for the retrace down in the down candle, but most of the time I will get it. So in this case here, I just waited for the first wick down. As the market's dropping down, I long, put my stop loss below this down candle. Very good RR. I'm risking what I'm willing to lose, and I ride it out to my targets. So I hope you guys found this one useful and insightful. Hit that like button if you did, and I'll see you guys in the next one. Peace.